Live in a constant state of fear and misery. Nobody understands me anymore. Live in a constant state of fear and misery. Nobody Live in a constant state of fear and misery. Nobody understands me anymore.
Hello, everybody. Bringing you Block Digest number 129 on September 30th at block height 543,788. So, Janine is MIA for the next couple minutes. What's going on, Rick?
Just the two of us, huh? That's all right, man. Yeah. Making it on about the fourth or fifth cup of coffee over here, just trying to dig through all this stuff. Seems like there's a lot going on, man. Yeah, Janine's not with us right now. Be here in a little bit. She should be falling in after our first couple stories or so.
It's okay, I guess. Until the whammon gets here, we got some time for some fart jokes. All right.
Yeah. Let's cut loose, man, with the farts.
Alrighty. So,
Yeah, that was a joke that we're going to go into the fart jokes. We're not going to do that. We're going to go into the stories, right?
maybe. All right.
Let's let's dig into it because this first story just keeps popping up and up and up. What's the new development on this?
All right, so a little bit of a follow-up slash correction on the coverage from last episode of the Bitmain IPO. I had said on Wednesday that the quarter two figures were not released, but they actually were buried deep in the actual prospectus. So thank you to BitMEX Research, Bitcoin Magazine, and all the others who actually dug through that 400-page behemoth. I honestly didn't have time to do much more than skim a little bit. But these figures pretty much put things pretty much where we thought they would be. They'd had the $1.1 billion net profit from quarter one of 2018, and quarter two put them at a net loss of around 395 million. So far for the first half of 2018, that puts them at a net profit of about $740 million. And quarter two was pretty much just a huge loss. And going forward, waiting to see what happens with quarter three figures, betting that there is a decent chance that those losses continue. Although a lot of the pain, I'm betting, already came in quarter two. So as much as I would like to see them burn to the ground, I'm finding it really hard to look at quarter three losses. If that is pretty much how that quarter pans out, actually wiping out the net profit and putting the entire year so far in the red. But it is a pretty big kick in the pants from all of 2017, which had them at about 1.2 billion in net profit for the whole year if they have another quarter of losses. And that would pretty much put the entire company hedging on the last quarter of the year in terms of making back those losses to wind up with a net profit that exceeds 2017. So I guess we're just going to kind of have to wait and see how that goes. I don't really think that they can pull the games they did with the quarter two figures for quarter three to anywhere near the degree. So just going to have to see how that pans out. Although in the prospectus, one thing that they explicitly point out and kind of acknowledge is a huge strategy error, which I find a little shocking, even for an idiot like Jihan. They pretty much set up their entire game plan for 2018, assuming huge continued increases in the cryptocurrency markets for 2018 following the crazy holiday run up that we had at the last part of 2017. And so this is actually why they sunk so much money into pretty much pre-buying fab time from TSMC and wound up sitting on the giant surplus stock of mining hardware that they have right now. And I am really kind of shocked by that. Like, as much as my analysis of Bitmain's actions over the last year pretty much comes down to completely misjudging the ecosystem and just really at the end of the day being an idiot. Like, I find it very hard to believe that they misjudged things so bad that they just assumed that crazy run up from like 8,000 to 20,000 would just full swing continue through 2018. I mean, like, this company's been around. I mean, shit,
A while now.
5 years. I want to say. They started putting out their first product was the U1 and then the U2, the little USB miner. Got one right here in my hand, and that was quite a long time ago. So they have seen these kind of market cycles play out, not just as Bitcoiners observing the market, but as an actual operational business that's had to adapt to that, changing market condition. I mean, in 2014 through 2016, like the bear market almost wiped them out. Like, Jihan has publicly talked about this a few times, where like the only reason that the company survived that time was really because they were able to, at the scale they were at, tough things out just a little bit longer than their competition, and then the market kind of stabilizing and then starting to turn around, it kind of just saved their ass at the last minute. And so it's really shocking to see that they just completely misjudged the market a second time after having the company literally almost destroyed by the last bear market. Then it's, as stupid as Jihan is, and a lot of the people running this company are, in terms of gauging the technology, the pretty much the user base of Bitcoin. Like, it's just shocking that stupidity extends so far to misgauging how the market would play out after a crazy run up like that. I mean, it's one of the constant things in this space. You have crazy run ups like that, and then we come smashing down and consolidate. And the fact that they bet so much of their capital on that just continuing, it's just mind boggling to me. And then the next thing coming from these figures is pretty much around August 2017, they raised $50 million. And then through June and August this year, respectively, they raised $292 million and $442 million. So coming from quarter one, when they only had about $100 million on the books in terms of liquid cash, with the rest of their assets split between their cryptocurrency holdings, the unsold hardware surplus that came from their misjudging the market, and prepaid fab time at TSMC, with a few other assets such as land holdings for mining operations. Like, they've now wound up with around almost $800 million in cash stocks. So, like, they have quite literally been bailed out in terms of the investors coming in before the IPO. Like they were at a point where literally less than 5% of their company's assets was liquid cash that they would have to move around and deal with costs, personnel, design, research, pretty much everything except the fab time, which was already prepaid with TSMC. And like this is, again, this is kind of calling back to 2014 through 2016, like this bear market and their overzealousness in pretty much just assuming the space is going to keep exploding in terms of growth. It, for the second time, almost completely destroyed this company. And frankly, the only reason that has not happened is they were able to perpetrate the fraud that they did with all of this completely false information leading up to this IPO filing that solicited money from investors and actually convinced, based on a lot of blatant lies, people to sink more capital into this company. And if they had not successfully pulled this off, they would be on the verge, if not at the point of bankruptcy. Like this capital injection quite literally saved Bitmain's ass. Looking through the rest of the figures, we can see that they pretty much had to write down the inventory value of their hardware surplus by around almost $400 million. So that is a huge bit of loss there. And they've recently announced the 7-nanometer mining chip. And the BitMEX analysis that I'm looking at right now is kind of being a little less skeptical than myself and a lot of others are with this, kind of pointing at the fact that the 3 failed fab attempts that cost Bitmain almost $500 million, they didn't even mention publicly. Like they made no announcements regarding those. And the only reason we really know about those is because of whatever source has been leaking all of this information out of Bitmain for the past few months, leading up to the entire IPO filing process. And so they seem a little more confident that there's actually a solid, viable product behind this, because in their past failed attempts, they made no public announcement or mention of any of this. Although I'm still pretty skeptical of that analysis, because when you really look at the overall situation they're in, they pretty much just had their ass saved by these pre-IPO capital injections. And the kind of things that they did to get this influx of new money is pretty much blatant fraud. And I cannot imagine anything going on right now in that company except the C-levels scrambling to try to prevent investors from pulling out, from lawsuits being filed for fraud. So I would very much think, given the specifics of the situation they're in, that they do have an incentive to kind of publicly announce this, even if things are not ironed out and they are not 100% certain that they can actually get a viable product for this. Not to mention that, even if this does, looking at the claimed chip efficiency versus what is likely going to be the range of efficiency of an actual hardware unit compared to a lot of the new equipment coming onto the market, even if they are able to get a viable product out to market sometime soon, this is still, falling far behind the efficiency of the competition. And it's, they're kind of sitting here right now. They've had their ass saved by these investors pumping new money into things, and they have to kind of appease these investors now who they blatantly lied to, pretty much committed fraud to, in order to hold on to that money without lawsuits and other legal actions, and without having this dynamic of investors who are very skeptical, pissed off, and more likely to attempt to exert direct influence over what the company's doing. And so, I think they're definitely not out of the woods yet, but really looking through all of this analysis that BitMEX Research has gone through, I do think that there is a decent chance, if they can kind of navigate the narrows that they're in right now, that they might actually be able to salvage this situation and kind of prevent themselves from just completely going bankrupt and smashing this company into the ground. Although, given the fact that looking at the situation in 2014 to 2016 that they were in, which was not too dissimilar from what's going on now, even if they can successfully pull that off, if they're not able to keep up the research to actually get back ahead in terms of product efficiency compared to the competition and continue this kind of reckless attitude, I'm still not so sure that in the long run this is going to work out for Bitmain if they're not allocating their resources in the right places and they continue just being wildly reckless. I mean, luck doesn't last forever. And pretty much this time and the last time Bitmain had to deal with a huge bear market, luck was pretty much the only thing that pulled their ass out of the fire.
Like this story keeps going up and down with Bitmain. I'm wondering, are they going to be doing good in a next quarter? Are they going to be closing up shop and filing for bankruptcy next quarter? That seems to be where this story keeps popping up because, like you were saying, that 85-page document, for anybody to really go through and parse it out. And kudos again for BitMEX research kicking ass on that subject of just like digging into the details of all this stuff. But yeah, I mean, like shady business, that's it's like Bitmain's basically just the risk takers, right? They're like trying to do what they can to make the most they can whenever they are making it, I suppose. And I'm just thinking about, like back whenever 2014, they were really coasting on the fact that they had the most efficient miner in the background, and they were running those large mining farms, and there was lots of orders coming out for those S9s when they were coming out, and so they were really banking it up even during that bear trend. I imagine they were kind of filling their war chest a little bit, and but yeah, this whole them being shady about their numbers just seems usual as far as like companies that are on stock exchange. I mean, I just immediately start thinking about some of these companies where they haven't put forward a solid product in a very long time, but they still have a solid stock price and are moving through S&P 500. And I mean, I'm kind of curious. I've seen some discussion about, it was like this investors coming in kind of saving their ass on this last move to IPO. And, I know that they did make a big bet with BCH. And I'm curious as to like if they imagine that they kind of took advantage of that whole Coinbase BCH scenario and at least tried to get some of their money back. I mean, I'm not sure if, you could actually see that. What do you think?
No, I mean, it's like they're really just kind of flying by the seat of their pants, hoping exponential growth is really going to save them. And I mean, those Cash bags, it's going to be interesting to see what happens to them because like they're sitting on around 1 million Cash, and depending on how shares and influence actually get split up after the IPO, I mean, I've talked about this multiple times, and it's something that I consistently see never covered in the media, never brought up. And I don't know whether people just don't want to talk about it or if everybody just doesn't know. But Jihan is not the only CEO of Bitmain. McCree Zam, actually, the co-founder and co-CEO, has more of a share influence than Jihan. And his entire reason for getting into this company was the AI ASICs. He's a hardware engineer. This is why he got involved with Jihan and started this company in the first place. And depending on how, shareholder influence is split up post IPO, he's not very public. He does, from the few comments he's made, seem to lean on the big block side of things, but he's much more reserved and nowhere near the hothead and idiot that Jihan is. And so I kind of want to see if we might see him and other shareholders post ICO kind of group together and use their influence to pressure Jihan out of control, to kind of temper all of the stupid shit that he's been doing for the past year or two. And that could potentially wind up, forcing them to liquidate that Bcash, because you like just looking at the market, looking at the development of the space. I mean, it's going nowhere technologically, like economically. The entire project is a joke waiting to implode on itself, and the market's completely illiquid. Like if Bitmain was sitting on, at least in fiat terms, an equivalent value of Bitcoin, that's something they could liquidate. That's something with an OTC market they could move without affecting the actual spot markets. There's enough liquidity on the exchanges to kind of slowly liquidate that without an insane amount of slippage. That's not the case with Bcash. And it might, I'm waiting to see how this plays out in the long term, and whether or not other board members post IPO kind of get together and force those out of the books and just kind of deal with the pain now, instead of sitting on that much of a liability in terms of company assets.
I mean, I really hope that's the case. I would like to see that play out, because in my mind, I was thinking about it in a much worse way. It's like, the Chinese government backs this horse, there's in the IPO, and they want to see BCH succeed. And therefore, it's like Bitmain doesn't really have to necessarily bring in these major returns in Bitcoin mining or like the hardware itself. I'm just thinking about, the US government sometimes plays horses in the stock and says well, we want these guys to continue, even though they're not doing something really useful for the market. They're doing something useful that we don't know about. And I'm thinking something similar like that could happen with the Chinese government and Bitmain. But I hope that your scenario plays out, where the Chinese government is seeing something that's a nuisance, and the rest of the company sees Jahan as kind of a liability that should be kind of got rid of. It's hard to say, that's why this story keeps coming back up. We're just working with the information that we're seeing right now, but there's definitely a lot of different motives at play, and people that would like to have a ringer in the space, as far as just like somebody that, they can control, as far as this big company with this big name that's been around for a long time. And that's where I also think, they could just keep, if they just keep selling stock or however they want to deal with it, to where they're not actually, sorry guys, I know that my internet just keeps messing up on me.
You're good, man. But yeah, if you just want to finish up your thought, it's not like we can't hear you. It's just kind of choppy here and there.
Okay, yeah, it's like can never get a solid stream around here. But yeah, just my final finishing up that thought is just like, we're gonna see this story keep popping back up, and hopefully we'll start to see a little bit more as far as like what their motive and course of direction, because right now it just looks like it's all about this IPO, and where they go from there, I don't know. The story will continue.
But I don't know, Janine, you got anything to weigh in on before we slide along to the next one?
Not
Janine.
really. Yeah, I'm here. No, don't really have any thoughts on Bitmain, except I would not want to be holding 1 million Bcash right now. What's the price? I don't even know.
I don't know either.
Basically, the answer is bad news. Always.
Alrighty then. Well, just ate up about a half hour on that. So update finito, and on to the next one. So BitGo is putting a lot of thought into actually securing their cold storage, given the fact that they've just recently been approved to be a regulated custodian out of South Dakota, and pretty much been doing a lot of regulatory compliance and really thinking through the entire security setup. And I feel like I have to get this out of the way before I go through the meat of this, but I think Mike Belshi is an arrogant piece of shit. And the two things I have to point at here are a talk that he did a few years ago in the wake of the Bitfinex hack with a few people from Whalepool, in which he pretty much said that this space is going to become custodial and you just have to deal with it. And his entire attitude and actions during the entire New York agreement and SegWit 2X play, which was just unbelievable fucking arrogance in terms of his attitude that because he was the CEO of a major company, his opinion or assessment of things was just worth that much more than anybody else. And just the general attempt to kind of throw that weight behind the entire 2X movement and push it through, ignoring all like the lack of consensus, all of the pushback from a large amount of other businesses, as well as just the user base in general. And so despite the fact that I think a lot of the points he's making on this topic are pretty sound, I still hold the opinion, frankly, fuck him. So
I also still hold the opinion that I wouldn't touch a custodial or semi-custodial BitGo system with a 39.5-foot pole. I still have that opinion.
Mm-hmm.
Yeah.
But that said, though, there are a lot of social and engineering issues that really have to go into, securing a system like that. And the way he's putting it, frankly, is, over the last few years, you've seen their largest wallet go from around 10 million to around 100 million, now close to $1 billion as of last year. And so the way he's looking at it is, how do we secure $1 trillion wallet? And one of the quotes here is, it pretty much comes down to two things in his words: kids and fingers. And kind of the general point that he and his team are trying to make here is, it's pretty simple to have a hardware wallet. Like, I have one right here. It's air gapped. It's offline. I don't have to worry about somebody hacking my computer, because even if they do, this is not connected to it. My private keys are not on a network device. I don't have to worry about remote exploits stealing my funds, because it's not an issue. But if somebody showed up and wanted to chop my finger off, that's a whole different ballgame. If somebody took somebody in my family and put a gun to their head, that's a totally different ballgame. Because in reality, I'm going to give them the money. I don't want my finger to get cut off. I don't want to have to explain to the rest of my family why somebody we all love is dead because I didn't want to give somebody money. And when you start talking about amounts in the billions or potentially over the next 10 years, trillions of dollars, that is a huge security risk. No matter what your technical or engineering side of things is set up like. If you can threaten people and those people can quickly get access to something, then all of the technical security you've established isn't worth shit. And so these kinds of systems, custodial systems dealing with large amounts like this for institutions, really have to establish, sound policies and division of access control among a large group of people, or like the entire security setup is completely pointless. And to kind of look at the legacy system and how they handle things like this, a lot of hedge funds don't just use one custodian. They'll have a large number of custodians and split their funds up between all of them. Like you might have, Belshi's been looking into this a lot. A hedge fund might have 15 or 20 custodians and only have 5% of their assets in each one to kind of limit the access here. And when it really comes, down to this kind of problem, like there's a lot of different aspects to it. There's the technical security and the key isolation from network systems. There's who is actually in control of managing those things and what kind of mechanisms can be put in place to secure them from blackmail or coercion, or even, them directly trying to steal something themselves. There's how complex can you make these things in terms of the actual encumbrance construction on the Bitcoin network. So the scripting system, Mast would be, or, the improved versions, Taproot, Graftroot, I would say a necessary thing to really construct a system like this. And you really have to cover all of your bases here. Like this is not something that we can just snap our fingers and build right now, because really a lot of the pieces aren't there. Like, right now there's a practical limitation on multisig. You can only have 7 participants in a multisig address right now. So do you really think 7 people are enough people to secure $1 trillion? You think you can really keep track of 7 people to such a degree, have things in place to hold them accountable to such a degree that there's no room for them to conspire to steal $1 trillion of a digital bearer asset that they can move anywhere on the planet like that? Like, no. And like, what about loss? What happens if you have a 5 of 7 system like that, and 3 people, their keys are destroyed, they're killed or hit by a bus and slip into a coma, and nobody knows where backups for things are or how to access whatever management device they have set up for that now? Like, then poof, that money's gone. And it's all of these things have to work in tandem in such a way that people are held accountable, that the ability to physically threaten or coerce somebody is so expensive because of how distributed it is that that's not a practical way to gain access to these funds. We need to really improve the scripting system of Bitcoin itself to allow more participants, to allow more complexity in the scripts, to allow, fail-safe mechanisms or recovery mechanisms in the event that keys are lost or damaged or made inaccessible for whatever reason. And it's like, this is not a trivial issue. And really, at the end of the day, how fast is this ecosystem going to grow? We don't know. That's not something in any single person's control. That's not something we can just hit a button and go slow down, Nelly, because we haven't figured out these security issues yet. The space is going to grow however fast the market dictates it's going to grow, and we're just going to have to deal with it. And so these are just very complex issues, and not just for large institutions like this. They're most prominent and most evident for any kind of large institution holding funds for other people. But these are issues that individuals like us are going to have to deal with. Like, how do you really set up your cold storage if you have 50 Bitcoin in 10 years and they're worth a few $100,000 or $1 million each? How do you really make it ironclad enough you're not going to lose your coins? How do you set it up in a way where your family can't just take something, somebody gets greedy, like it tries to steal your money, somebody kidnaps somebody in your family or tries to coerce you directly to steal it? Like, we don't have answers to these issues. There is no policy. There is no procedure set out. And we're all kind of just thinking about it as we go along and figuring shit out. So, like, as much as I think fuck Mike Belshi, he has a lot of solid points when talking about this topic.
Well, the one thing that I feel good about in regards to whether custodians will have to deal with these kinds of questions in the first place is that, I mean, I hate chain analysis and what it enables and the fact that they work with law enforcement. But I've seen a report from them recently in the last week where they said that the majority of Bitcoin, or at least increasing amounts of, or increasing ratios or percentages of Bitcoin, are going to individual addresses and not into custodian accounts or fund management things. They're going to, it's like increasingly being held by individual people, which, I mean, from my perspective is great news, because that means that there's not as much pressure to ask these kinds of questions, because it means a lot of people got the right idea from the beginning, which is the greatest security advantage of Bitcoin is that as many people as possible hold their own funds. You don't have a giant honeypot of, hundreds, thousands, maybe someday millions of people held and controlled by, I don't know, X of 7 or X of 30 even. That's, the greatest security advantage of Bitcoin is that it's safest when everyone controls their own money, or at least as many people as are capable do so. So, I mean, I'm happy about that. I would never put my funds into any kind of custodial fund. Definitely not BitGo or Coinbase or any of these guys, at the very least. So, yeah, I mean, that's really all I have to say. Is I'm happy about the fact that people are listening to, us telling them and other people telling them that they should avoid custodians as much as possible if they can.
I mean, yeah, they definitely should, but like, these issues still exist for individuals to a smaller degree. And I mean, ultimately, like, there's going to be custodians. Like, that's going to take generations to really not become a thing. Like, it's just what people are used to, what people are capable of doing. And for the foreseeable future, for a large amount of people, it's going to be a necessary thing, and these issues need to be worked out. And I mean that at the end of the day, it benefits individuals who hold their own keys, because it gives them systems to kind of emulate at those lower value levels.
Well, the thing I would say, if Mike Belshi, I mean, he might be too arrogant to ask for help on this, because he might think he's, the best, most knowledgeable person on the subject. But if anyone, in this kind of situation were to, be interested in looking for examples of people who have demonstrated uh, years of good key management, not necessarily, I mean, in some respect for Bitcoin, but just for cryptographic keys in general, I mean, I would say talk to the people who've been running WikiLeaks, because, you know, I haven't seen any of their keys exposed or dumped. Like, they have a ton of very powerful governments and companies and what have you every day probably trying to infiltrate them. And I mean, there's been some things where, oh my gosh, we got a fake letter that was actually fabricated by this pedophile from Sweden, I think, who, to make his document look authentic, apparently had a picture of Assange's passport, or at least a very close copy of it. And it's like, that's the best they can do, is make a fake document with a copy of someone's passport who's a public figure. Like, if you want to get some advice about key security, I would talk to the people who have been dealing with that under a very high stress situation for almost a decade now.
Yeah, I wouldn't say it's a bad idea. Want to toss your 2 cents in the ring, Rick?
Yeah, sure, man. I mean, like you were saying, I think it's a long process, and generations before we get like all this stuff nailed down. Just like you're saying, I mean, we need more complex multi-sig, with like Schnorr signatures to be able to make those things more secure. And yeah, I mean, I know that they just recently got awarded a custodial regulatory, I guess they were approved to start this custodial service. And yeah, they need to start investing in the core developers that are just developers, trying to make sure that keys are passed on from like parent to child after death, or, somebody goes in a coma. That's a complicated problem that needs fixing for this thing to go through. Multi-sigs in place, and then some sort of process to get those keys to people whenever the person holding them becomes incapacitated. I think that, yeah, you can make this thing work. It's just going to take a long time, and definitely seek out some help from guys that have been doing it for a long time.
Mm-hmm. Alrighty, Janine, you're up.
Got robbed.
Yeah.
Janine,
So
I need help. Somebody stole my Bitcoin.
Well, Shinobi, I guess, you have to reverse the transaction because, apparently Bitcoin should do that. Oh wait, it doesnn't do that for a very good
How
reason.
do I do that?
Well, I really don't know. We'll have to ask the guy who gets paid $300,000 a month that question. Oh wait, he doesn't even know how his own cryptocurrency works. Oops. So so yeah, for anyone who hasn't, looked into the beginnings of Bitcoin and why it was created and the problems that it was trying to solve, Bitcoin was basically created because when all of the other digital currencies that came before it were run, they all had the same problem, which was, how do you prevent people from spending their money twice? How do you prevent people from, for example, sending some coins to one person and then, or simultaneously sending the same coin to multiple people? How do you know which one is the real transaction? Because if you don't figure that out, then obviously you get inflation.
Did I get wrecked or did you get wrecked?
I don't know.
Okay, you're back. You're back.
Okay. What was the last thing you heard?
Inflation. That's
Yeah,
bad.
inflation. Yep. Inflation's bad. That bad economically and not good in general for that, because of, we saw this inflation bug recently with the problem with the Bitcoin core client. So yeah, double spending problem, very important thing to solve. But apparently some people, they're not convinced of that. Some people think that double spending is the solution, that we need to be able to send coin, or even better, reverse transactions if they don't exactly go the way that we planned, or if we didn't do a good enough job keeping our keys secure. And one of those people is Zooko Wilcox. So I was going through, I have a lot of old screenshots of, things that I've seen that I haven't talked about, that I just maybe wanted to make a note for myself, and I screenshotted. One of those things I screenshotted back in April 2017 was a tweet from Zooko saying that he wanted to have an "I got robbed" button that would reverse a transaction if it were sufficiently recently. Well, that's a bit of a problem because, as many of you know, sufficiently recently, I mean, at the very best, assume that he would actually implement something that does this. Sufficiently recently in Bitcoin would have to be 10 minutes or less. At bet, like some blocks come in even faster than that. So who knows what sufficiently recently means. In Bitcoin, it would have to be under 10 minutes, which, if you have an "I got robbed" button, does that really give you a lot of time? Like a lot of, like some people, unless it's, if you have a hot wallet on your phone and you get a notification when a transaction goes out or something, you probably won't know that your funds got, like if it's a cold storage, for example. I mean, I'm assuming if you wanted to use an "I got robbed" button, it would at least be on a significant amount of money. So if it was in cold storage, you probably wouldn't notice within 10 minutes of it moving. Most people, the systems that I've seen, don't send notifications for that kind of thing. So it has a very limited applicability, but just in, the context of how would building something like this even be possible, it just makes no sense. And I actually had to explain to him why it would not work. First of all, I don't know how good his base knowledge of how blockchains work is even at the moment, because he made this tweet saying, the transaction has to be sent, posted to the blockchain where authorized parties can see it right away, but isn't confirmed until the timer expires. And I was like, I read that and I thought, that's the weirdest technically incorrect description of, sending a transaction I've ever heard. So first I had to explain to him that transactions don't get posted to the blockchain. They get broadcast to a network of nodes that each verify them independently. And everyone talks about the mempool. Well, there is no the mempool. The mempool is the memory pool, and all of the nodes have their own mempool. So when people are talking about unconfirmed transactions in the mempool, they're talking about, most of the mempool statistics basically come from someone running a node that has its own mempool. There is no collective mempool, really, not in any technical, meaningful sense. So you have all these nodes who basically broadcast these transactions to each other. There's no authorized third parties. So yeah, and then I explained to him that this hypothetical user that would press this button would only have an average of 10 minutes in Bitcoin, at least. Maybe he wants one for Zcash, which would be even probably harder because, maybe not, because most of the people using it are using the Bitcoin-like transactions, which have no privacy, but that's another conversation. It's just a very overly complex way to address the problem because technically we already kind of have things that would slow down confirmation, or I don't know. He thinks we should slow down the confirmation time of transactions, which would mean basically rewriting the protocol to make special transactions that are simultaneously valid, as in they could be confirmed, but not for a certain period of time, which would mean changing the whole structure of transactions. It would be, I don't know if it could be done with a soft fork or if it could be done at all. No idea. It just sounds like a stupid idea because if I wanted to, for example, if I had a large amount of funds and I just wanted to make them unspendable so that if someone did get access to my keys, it wouldn't make sense for them to, or it wouldn't be possible for them to spend them because they would be locked away, for example, in a time lock, or they would be locked in a multi-sig, which means even if they get one key, they would still have to get all the other keys in order to spend it. Like, using a multi-sig seems like not only a safer way to do it, but it also wouldn't require any rewrite of the protocol because it already exists. So I don't know. I mean, you guys can read through the conversations that I had on Twitter with a bunch of people who were trying to, like, no one that I saw was actually justifying what Zooko was saying. Most of them were like, I've only been thinking about this for a second, but what if we did this? And I was like, nope, not gonna work. And it was very funny because, if you guys actually see the tweet that Zooko made about the I got robbed button, you had people like Vlad from Ethereum, you had people like Emin Gunsur, you had Naval and Ryan Shea from Blockstack liking the tweet as if this was a good idea. I don't know what's wrong with these people, but I am pissed off and amazed that a guy who gets paid $300,000-ish per month, who doesn't even know how his own cryptocurrency works. Like, I would be embarrassed as hell if I was the CEO of a cryptocurrency company and I didn't even know how it worked, and I was getting paid hundreds of thousands of dollars a month automatically to do what? No idea what he does. I don't see him doing that much, to be honest. Like, it must be really hard being a CEO of, a cryptocurrency that has basically not gotten that much attention from law enforcement as far as I can see. Probably because it's not very private. Oops. I just like I don't know. It makes me so pissed off that like I'm not gonna say what I make, but I make vastly less than this guy, and I have a better understanding of how Bitcoin works than he does. That's pretty sad. Like I don't. That's just embarrassing. I would be so embarrassed if I was him.
I mean, like, it's in the most ridiculous thing about like that entire thread is like him like just scrambling around talking about time locks, and it's just none of that is really a viable idea. And the only analog of what he's discussing that's ever been talked about is the concept of a covenant, which would pretty much like actually be a script upgrade that would allow a transaction to be confirmed and then pulled back by one specific key. And I know exactly why Eamon Gunsire liked those tweets, because this is something he's been pushing for quite a while. And it's a completely stupid concept because it completely breaks fungibility. Like you can never treat coins being sent from a covenant the same way as other coins, because until the clawback period expires, you can never be certain that won't just be snatched back at the last minute. And like Eamon literally, I think it was 2016 at Scaling Bitcoin in Milan, presented this in tandem with some colored coin idea, despite the fact that colored coins were a totally obsolete idea. They've been replaced by op return tokens like Counterparty and Omni. And, I know Giacomo is kind of trying to bring the concept back on Lightning, but it's technically completely different. And his response to, one, being questioned about using an obsolete idea like that, and two, about the fungibility aspects of covenants, were, so what? There is no fungibility anyway, so let's just permanently break it.
Yeah, and that was the funny part is Zooko at no point actually mentioned, I had to mention to him several times, like, we have time locks, we have multisig, why is that not good enough? And he would never answer that question. I asked him point blank once, but also I mentioned time locks and multisig as like, hey, how about you use this instead? It already exists and is probably better than what you're talking about for protecting people's keys. Or protecting people's money in case their keys get compromised. And he just wouldn't answer me. It was all, I don't know if he didn't know they existed or he just wanted to mouth off about this idea that he's had for a long time that was ultimately stupid, and he didn't want to acknowledge that there's way better stuff that already exists and this conversation is pointless. Like, getting into talking about transaction reversal is just like, we're not, first of all, if you want to be able to reverse transactions, do some kind of escrow thing. Like, if you're really worried, just use some kind of custodial system. About, like, if you want to give up that much power and do that, go ahead. But we're not going to implement transaction reversal on the Bitcoin base layer. We're not doing that. Not going to happen. So this whole idea is like, I mean, it seems like that's what he was going for. He didn't really take any of the suggestions. Some people were saying, like, do this on a layer above or have a service that, I don't know, lets you, a separate service, a side chain that lets you reverse transactions. That's okay. But some of the, I want to read one of the suggestions that I got. Someone else made a thread that they were thinking about this transaction I got robbed button or transaction reversal problem. And this guy, Billy Garrison, was saying that you should have a specific wallet that looks the same as a Bitcoin wallet, but secretly sends out transactions as reversible. I was like, what the hell is wrong with you? You want to have a wallet that makes transactions reversible? Are you kidding me? Like, but secretly, not even like, this is a reverse transaction wallet. Make it a secret reverse transaction wallet. This is beyond silly. But yeah, my suggestion to Zooko is that he spends some percentage of his $300,000 per month salary, whatever you want to call it, investor share, founder's reward that isn't really deserved. Some portion of that should be spent hiring a cryptographer to teach him how this stuff works. At least teach him how ZK snarks work. Teach him to memorize an explanation of how ZK snarks work so that when he goes to meetups and talks and he gets asked that question, he can actually give an answer even if he didn't come up with it himself. Just do something, because this is beyond embarrassing. I mean, Zcash itself is beyond embarrassing at this point for so many reasons, but I mean, I just don't know how people like him get to the position they have with such a giant hole in their knowledge.
Somebody literally said that we should make a script feature to allow transaction reversal without making it publicly visible. You could do that. You just broke Bitcoin.
Yeah.
Nobody can trust any transaction ever because they have no idea if it's reversible or not. You literally just completely broke Bitcoin.
Yep. Yeah, I have it screenshotted in the thread under the main tweet, which got a lot of attention because apparently a lot of people agree with me that Zooko is out of his mind in some way. I don't know how he's out of his mind, but he is about this. But yeah, really disappointing. I'm disappointed also that, because like there are, smart cryptographers that are working on Zcash stuff, or at least researching on Zcash stuff. And the fact that either they haven't pointed it out to him, or he's too dense to understand it, or something is wrong where a guy like this gets this far saying stupid stuff like this, and no one around him is saying, stop, no, this is not how this works, we're not doing this. Like, imagine all of the merchant problems. Like imagine that's the best case scenario for this. I mean, if you had reversible transactions, the whole thing would be thrown in disarray. But imagine the response from merchants where, transaction gets confirmed, but then it's reversible, or it's unconfirmed. Like a lot of these merchant services, they do a 15-minute thing where some of them, they wait 15 minutes for it to be confirmed because they assume 15 minutes is enough for it to be confirmed, or they do it on a zero conf basis, which not great. But oh my god, this would make zero confirmation transactions basically like not even in any realm of trustworthy at all. Like it's like, I mean, I don't know how much Zooko and Roger Ver get along, but it seems like this would be, the opposite of something that Roger would want for Bcash, but I don't know.
Yeah, it's kind of hard to tell what exactly Zoku was thinking. Met him a couple times, and he's definitely kind of a unique character. And the amount of money, it's like that's ridiculous, but it's kind of like that's just the way of the market, right? It's like there's a bunch of idiots that get paid a ton of money. The most upset, it's like, and I think this is why Zoku has a problem getting counseled, or anybody kind of coming up and saying like, Zoku, maybe we should think about it like this, is because of his nod from Satoshi back in the day where, it's Zoku, and it's nice to talk to you. It's just like, I think like that nod, and just like he's been around long enough to where people don't want to, I guess, discuss topic, doesn't know what he's talking about. And I think that's one of the main reasons we're not seeing any real pushback, instead of, like you're saying, people like, oh, maybe we should bring back this idea of I got robbed button that is, recreating the double spend problem.
Yeah, and the one defense that I've really seen from people is like, Zooko is just a nice guy, just leave him. It's like, no. If you're going to be running an anonymous, if you're basically running a company and participating in a foundation in the US that is trying to run an anonymous cryptocurrency, you're either going to make that cryptocurrency so terrible that it's not even worth using, or if you're actually going to, challenge the status quo, you don't want to be a nice guy that is surrounded by yes men. You are going to get screwed. And one of the things that distributed. It was a separate thing to my thread with him, but he goes by Distributed Bit on Twitter, and he made a tweet saying that at the Beam Privacy Coin and Zcash and Zooko, he tweeted that you're all central points of failure and have destroyed any chances your coin ever had at becoming actually censorship resistant or immutable, or having a community who aren't get rich quick short-term status. And Zooko liked that tweet. I don't know. Some people have really strange policies about the tweets that they like. Some people treat it as bookmarks, but that's a weird thing to do, to like that tweet saying that you're a community of get rich quick short-term status. Not a good look.
Honestly, I think Blockbane in the chat nailed it. He said that, this is an appeal to ETH and like the whole crowd about DAOs and stuff. Because, yeah, I think Zoku and Vitalik have been working a lot together lately. It seems like a bunch going on there between Zcash and Ethereum. And I think that, yeah, we kind of need to stop looking at it in the sense of like always trying to work within this Bitcoin ecosystem. I think that they've got their whole other idea put together as far as what this is forward. And maybe that's, I don't know, something I was thinking about is like if the B Foundation or whatever is going to be a real thing, then they need to invest all their money and send some guys over to the Rockies and start teaching some people in the Colorado area about what exactly this whole ecosystem is trying to achieve. But yeah, let's I think that's about all I got to say real quick.
Well, and the scary thing for me was after, I think it was a day or so after this conversation about, and I got robbed button, then Zooko was tweeting about how proof of stake looks so good and it's been demonized. And like, I think he even said they were thinking about moving Zcash to proof of stake. And I was like, do you guys really want to take consensus advice from a guy who doesn't even know, like he doesn't even understand how Bitcoin's consensus works and why you wouldn't want to even suggest transaction reversal stuff on the base layer? Like, if he doesn't understand that, he is in no position at all to be making recommendations about consensus changes.
Yeah, I don't know. His Zoku for sure, and we're gonna see that whole situation play out. But I think in the interest of time, I'm gonna go ahead and get us over to this next story, talking about one broker, that that's been causing some news. See, so yeah, they've been targeted by the SEC, the FBI, and the CFTC. One broker was based out of the Marshall Islands and handled Bitcoin-based derivatives like the Bitcoin futures. They strive to be this large volume exchange and market maker. And, they were there in the Marshall Islands, which is a U.S. territory. But the CEO, Patrick Brunner, an Austrian native, and it appears like all that wasn't good enough for this whole new round of KYC AML policies. But let's dig into this. So one broker has a terms of service where state customers have to verify that using our service is legal in their country of residence. And, they try to make everything as efficient as possible. They didn't really put out these large emails and stuff like that. We were seeing Finex and Poloniex where they were making a large statement and saying like, look, if you're in the U.S. and you haven't KYC'd your account, then you're not going to have access to the funds. And really take any of that extra effort to cut off U.S. investors other than that notation in the terms of service. And, since this large push to KYC all the on-ramps, like I'm saying, there's been multiple exchanges that have already done this and an announcement and send out emails to their users and basically just a large marketing push of letting people know like, hey, if you're in the U.S., you can't do business here, unless you KYC. This is from the press release from the SEC. The SEC alleges that a special agent with the Federal Bureau of Investigation, acting in an undercover capacity, successfully purchased several security-based swaps on one broker's U.S. despite not meeting the discretionary investment thresholds required by the federal securities laws. The SEC is further claiming that one broker was not registered as a, quote, security-based swap dealer and to transact its security-based swaps on a registered national exchange. And the SEC is looking for a permanent injunction against CEO Patrick Brunner and OnePool, along with and disgorgement plus interest. And the CFTC also filed charges against one broker for failing to implement these KYC AML policies, and the FBI has seized onebroker.com's domain. It has violated money laundering and wire fraud laws, in addition to operating as an unregistered broker-dealer of securities and operating as an unregistered futures commission merchant. And once to this whole situation on their website, they say, quote, on September 28th, our domain onebroker.com was closed by the United States Securities and Exchange Commission. This means that the trade is not accessible anymore. Funds, servers, and databases are not affected. Currently, our top priority is to allow customer withdrawals. The company holds enough funds to cover all withdrawals requests. Of course, before the required steps to do that, we have to seek permission from the authorities. During this whole process, we are supported by our lawyers, and we will regularly post updates. Please note that all our emails sent to onebroker.com email not received by us. You can use support@onefox.com to contact us. All updates regarding the activation of withdrawals will be posted. Please do not contact us for questions. Please expect delays of up to 5 days until we respond due to high amounts of inquiries. And just a little bit of a clarification there in their statement. They had a little question answer there. It said, when will withdrawals be available? And they said it depends on the authorities, and we cannot estimate this yet. And any updates will be posted as soon as we have them. What happens to open positions? All open positions have been closed as of September 28th, 2018, and funds were credited to the cash balance. Market price movements will not affect your balance from now on. And in this charge, it's all really up against, which is a company that covers one broker and one Fox, which is another trading platform. And the question is, what happens to one Fox? And one Fox is not affected. However, to avoid any additional issues, creating new not possible, we will also proactively contact the involved authorities regarding one Fox. So this is what's been going on with the one broker situation and the SEC, and it looks like, the SEC is just not really happy with the fact that they didn't put out a big marketing push to say that U.S. investors aren't allowed there, and taking additional steps to keep U.S. cut platform. And because we've seen, like I said, we've seen some exchanges go in this direction, and they haven't, had any real legal issues or hiccups since they started, cutting off U.S. customers. But this and OnePool, they were really trying to take this philosophical stance of like, this is just crypto, and we're not really doing anything that's going to cause any overhead that is going to increase fees for our customers. So way low, and they basically just kept it all in their terms of service, and that wasn't enough for the SEC.
Yeah, I think the SEC and the CFTC need to mind their own fucking business. And the fact that this exchange is being shut down, operating, is just the most insane, ridiculous overreach ever. And like, frankly, the regulations that they're using to justify this and the nonsense around it is insane. So you have to have like $1 million to trade stocks or stock derivatives. That's like, why? So if I have $1 million, I can now invest in something like Google or like fucking Exxon to actually try to build wealth for later in my life. But if I don't have $1 million, well, all I can do is play the lottery and piss
That's
away money constantly gambling with shitty odds and almost guarantee that I'm just going to lose all my money. See, it's cool. It's cool to just piss away all my money gambling if I don't have $1 million. But I can't invest in anything to actually try to predictably, increase my wealth for later in life.
yeah.
Unacceptable.
I mean, so that's why I wouldn't necessarily call this the most ridiculous justification, because that, in this case specifically, because literally that's how it works. If you don't have at least $1 million, you're considered unsophisticated. You're considered too unsophisticated to be an investor, which, I mean, obviously that is stupid, but like that policy has been around for quite a while now. Like, it happened with the that's what ended up, or I mean, if it hasn't been the downfall already, it will be the downfall of Kodak coin, which was like, we're going to democratize photography. And it's like, yeah, your democracy consists of people that make at least, or have at least $1 million. That's going to be a very interesting photography platform of basically millionaire institutional investors. Because they had to, they were told by the SEC that their token is a security, and that's what they were going to have to do. So it does not, I mean, I'm honestly surprised that a bunch of these platforms survived as long as they did, especially the ones that are have all of these scammy affiliate link or referral links or whatever. The people are constantly posting hash tone days. Really doesn't surprise me. Also doesn't surprise me that the whole investor law foundation is a bunch of bullshit, but it's been bullshit for a very long time. Like, there is a yeah, I mean, basically the lottery is the only investment that anyone with less than $1 million is allowed to do, and it's a really crappy investment because it's not a lot of options, and obviously there's almost no chance of you even winning money in the first place, let alone a lot of money. So yeah, doesn't surprise me that this thing. But I do want to quote something that Booger's guy said in the troll box, which is when they say that they don't want to be contacted, what they're saying is, please do not contact us. We are currently scared shitless of the FBI.
Yeah, I mean, I guess so. I mean, like, as far as this CEO, Patrick Bruner, I don't think he's like in custody or anything yet. And I think, like most of the time, the SEC just wants, and they want everything to be done above board. It feels like, and it just feels like maybe they're looking for a little bit of a payout from these guys, or, just a little bit more of the implementation of AML, working like that. And yeah, it's hard to say, but I mean, they do have OneFox still up and running, and that's in their, umbrella right there as far as what one pool. I didn't shut OneFox down. Kind of makes me think they are working with them to where they're trying to get back operational, to where it's not going to be like BTCE and just be disappeared. I think they're going to fight this, but we'll see. We'll follow along. If you do have some funds in there, be prepared for them to stay there for a while at the market value from September 28th, and just we'll wait this stuff out. But this is one of those custodial problems, and not sending your coins to a third party. And I understand some people, this is the way that they make their money, and so unfortunately, some of these things, you really have to. If you're from the U.S., I'm sure you kind of understand people outside the U.S. I'm sure you are really upset by this, and I guess that's just how serious the SEC is going to take this stuff, and we'll just take that, move forward, and wait for the update, and hopefully I can issue everybody's Bitcoin back out to them.
Mm-hmm. All right, though. think I've said all I've got to say on that. You guys all commented out? Take that as a yes. All right.
I do have one thing. If you were someone who was using one broker and you were storing enough Bitcoin on it that you would actually want to claim it back, one, you had way too much money on one broker, and two, you shouldn't you shouldn't want it because I guarantee you that there are going to be people watching where those coins go. You're basically de-anonymizing yourself. I mean, I don't know how one broker works. You might have already de-anonymized yourself just by using it. But yeah, if it's not if it's not too much coins, I would just leave it. Like you really just don't want to touch it.
Mm-hmm. But all right. So guys, how about all those early coins like Satoshi's? You know, all those Bitcoin oligarchs are they're gonna crash the market and fucking kill Bitcoin because it's too concentrated, right? No. So CCN put out a report 2 days ago, and a blockchain analyst, Antoine Lecalvez, has been tracking some old coins for quite a while. And since around December 2016 up to January 18, over 30,000 BTC were quietly moved to exchanges and sold on the market that were mined back in 2009. So, a very, very early miner from the days of CPU mining has quietly cashed a large amount of coins out over the past 2 years, and nobody noticed. And this was actually going on during the crazy bull run up to 20K. And the interesting thing is, we don't know who this is. We don't know how many coins they could have mined or when they started mining or stopped mining. And that's because this person slowly went through his coins linearly from some early point in December 2009 forward in the future and sold earliest coins to the oldest coins. And it didn't crash the market. It didn't kill Bitcoin. And we have no idea if this person mined earlier than that. They very well could have and just chosen to start dumping coins they mined at the period in December 2009 to not connect themselves to earlier coins. They could have continued mining for a very long time, and we don't know because we only see this one chunk of coins. For all we know, this could literally be Satoshi having cashed out a large chunk of coins.
Yeah, I'm waiting for the next Bloomberg feature where someone comes out and says, "Hey, I'm writing a book, and hey, I was the one who moved these coins. I am Satoshi," and they're gonna accept it. Hook, line, and sinker.
But it's just an interesting thing to point out for a number of reasons. Like one, this just didn't crash the market. We didn't see some of these CPU day coins just get dumped in one batch and drop the price to zero. It didn't happen. That's not a rational thing to do. Like two, we have no clue who this person is. Like literally none whatsoever. And the only people who do are exchanges that are not legally allowed to just divulge that publicly. And three, I mean, people like to cry about how concentrated Bitcoin is. It's actually the most distributed out of all of the cryptocurrencies out there. And this meme that people are sitting on tens or hundreds of thousands of coins from way back in the CPU mining days, I mean, here, 2 years this person has been cashing out. Like people who got in that early, like that many coins, they're not going to sit there and hold on to them forever. There are economic incentives involved here, and those coins are going to get redistributed. They're going to be distributed more widely. There's not just going to be 20 people in 10 years that have half of the Bitcoins in circulation. That's not how things work in markets. The amount of people who are actually going to hold for that kind of time horizon to that large of a degree, it's not practical. You're going to cash out and take profit. You're going to realize your gains in some way, and they're going to circle out through the market to more and more people. I mean, this is literally the entire aspect of the incentives that gives this a chance to work in the long term.
Yeah, it's definitely interesting to see some early mined coins being moved and it not really affecting the market that much, just as much as see coins, the Gox trustee or something move and everybody freaks out. And I think that is because, like you're saying, they're doing it smart and they're doing it like the way that, this is the way the ecosystem's supposed to play out. Somebody mining from 2000, I mean, that was before Bitcoin really even had a price. I mean, it's like the cost of running your laptop. And I mean, come on, you don't want to be one of these trillionaires trying to figure out how to store your coin. Somebody's trying to kidnap your kid or cut off your finger, like the custodial Belchi says. I mean, it's like eventually you're going to realize those profits. They're going to go back out there. Somebody else is going to buy them up, and I mean, people will keep riding this. Some people will ride it the wrong way, but I mean, that's the way. I mean, it's good to see. That's what I mean. My main point. It's just good to see that these coins are being moved and it's not really affecting the market, because I know that's one of the main things when discussing the Bitcoin mechanics and monetary policy and all the way this works is like one of the things people worry about is those Satoshi millions, and some of these early miners have large stacks of Bitcoin. And could that spook the market? And we're seeing from this story that it didn't really spook the market. The market's been moving and progressing without really even, it doesn't look like this is causing an effect. It looks like this person's just cashing out over time the right way. I mean, like, I'm sure if it took all their coins and dumped, it wouldn't look good. But I mean, like, if somebody wants to get in this ecosystem the right way, such as mining, buying and, getting out the right way. It seems like this is going good.
Mm-hmm. All right. Next up, two rapid fire stories that are even more bad news for Bitmain. Squire Mining Ltd, a Canadian company, is partnering with Gaian Chips to design a new line of 10 nanometer ASICs. And the game plan, after chips are developed and the design finished out, Samsung is going to start manufacturing these. So we have a brand new upstart company diving into the mining ecosystem. So this is going to be pretty interesting. I mean, so far, like, completely new companies. We've had DWP Holdings develop their Anteater chips that are also being produced by Samsung. Byteway, headed by the former Bitmain engineer who designed the S9, recently got out of their legal battle with Bitmain and is bringing a new miner to market. The next story is going to be covering a new company. So, yeah. And Orion, another Canadian company that earlier this year announced their product line at a Canadian Bitcoin miners meetup that Francis Poulet and Kevin Bertrand were at, if I recall correctly. So, this competition is continuing to heat up. And, like I covered in the first story today, Bitmain is really just kind of playing fast and loose and relying on luck. And by everything we can see right now, are falling way behind in terms of chip efficiencies. So this company is something to pay attention to in terms of how efficient these actually are in electrical consumption by the time they get to market, although there's really no timeline or anything right now. So see how that goes. And in Japan, Triple One, a company established in 2016, is finally getting close to market. So back in February 2017, they began developing a 7 nanometer mining chip. And I believe we've kind of mentioned this company in passing a few times on the show before, and completed the design in February of this year. Well, earlier in September, they released the results and performance evaluation of the new mining chip with a 50% reduction in power consumption while maintaining the average hash rate of a machine out now, on average on the market, and are going to be shooting for the shipping date of sometime in November. So GMO is going to be having their 7 nanometer chips hitting the market by the end of October. The next month, Triple One's Kamikaze 7 nanometer is going to be hitting the market. Avalon has 7 nanometer chips coming to market soon. We have the Anteater, no timeline, but the Squire 10 nanometer chip. How long was one of the first companies to hit 10 nanometer chips on the market. Byteway is pushing out a 16 nanometer chip that is as efficient as a lot of these 7 nanometer chips. Yeah, Bitmain is just like they're rapidly getting burned in terms of the efficiency of competition's machines. And I mean, they are really gambling on hoping that money jumps in to invest and sticks around with them, and oh yeah, I forgot eBang with the 10 nanometer chips. So Bitmain is literally the last company that is coming to the market with a chip more efficient than 16 nanometers after 2 years of stagnating. I mean, this like I said, after we've seen the Q2 financials for Bitmain and kind of looking at the capital float they've been able to raise in terms of liquid cash, it's not as black and white that they're just going to crash and burn in the very short-term future, but they have a lot of catching up to try and do to actually maintain that competitive edge. And the minute that price, stops this sideways nonsense and starts rallying again, I mean, look at all of this competition. Like a lot of it has been kind of in the works for a year or more now, but this is coming online in the middle of a bear market. Imagine how much more incentive there is going to be for competition when the price is skyrocketing again. Like this is not just a pie that Bitmain has locked down anymore, and they're going to have to seriously fight to maintain a decent share of it.
Yeah, I think that they're a big bet on BCH and kind of just keeping their hardware where it is. I mean, that BitMEX research did show that a lot of money trying to tape out these 10 nanometer successful. And yeah, I mean, like maybe that's where they're getting all this investor money and IPO money together to try and play that game again. But they're definitely going to be coming behind, because there's that are already pushing out products with these nanometer chips and open source brains OS, like open source software for all this hardware, and or that was firmware. Like overall, it just feels like the whole mining landscape is just opening up to so many more competitors. While Bitmain's trying to play this IPO game, and we'll see how it plays out for them, but it does feel kind of like that's their only play right now. I mean, makers that like to step out and see if they can make a big move. And, I guess that's right now they're just trying to keep up with what's going on, even though they made that big bet.
Mm-hmm. All right, and next up, some kind of shitty news, although a lot of the context of it is really not clear. I've been trying to poke around and find a report on the actual ruling of the Supreme Court in India. I still have not been able to actually find anything in terms of their final ruling, but one piece of news making it out of India is that Zebpay, one of the largest exchanges in India, is pretty much closing their business down. And the justification for this is pretty much the inability to actually access bank accounts or fiat services so that people can move money in and out. And yeah, this is exactly the kind of shit that I've been worried about following this case. Like, it's going to completely cripple the entire ecosystem in India not having access to fiat services. And I mean, yeah, people might be able to try to use peer-to-peer exchanges, change things in cash, but I mean, that's not really a viable solution to maintain the kind of access and on-ramp or off-ramp liquidity that a conventional exchange does. I mean, it's just not going to allow the kind of growth that these businesses did in the country. I mean, it introduces all kinds of friction in terms of liquidity. I mean, like in exchange, you send your Bitcoin, somebody wires you money to the exchange, it gets sent to you, things change hand, you're done. Without access to that, like, think about the implications for that market structure. Where is the Bitcoin going to come from? There's only so much of it in India. So you're talking about a supply crunch there that's going to drastically affect the market prices and have all kinds of complications for arbitrage to really keep that in line with markets and the rest of the world. If I try to bring Bitcoin to India, that's not a problem, but I'm going to be receiving fiat currency for that when I sell it. How do I get that out of the country? Like, how do I move that to actually go repurchase Bitcoin somewhere else where there's more supply at a cheaper price and actually close that arbitrage loop? What kind of effects are this going to have on the total supply of Bitcoin available in India? And how is this going to affect the price in India? Because generally when you have a lack of bidirectional flow like that, you're going to see huge premiums in the price. And so, like, what does that say in terms of how people in India can actually interact with Bitcoin? If things are going to be trading at a huge premium, what can they use it for? Anything that they try to use in terms of purchases, they're going to get fucked on the price. They're going to be paying a huge premium to actually get their hands on a Bitcoin. And then to go spend it somewhere, it's not going to be valued anywhere near what they're actually paying for it. So, like, I mean, if the court has actually ruled to uphold the Reserve Bank's standing that these businesses are not allowed to deal with fiat businesses, and this continues as a permanent precedent, this is really going to fuck up the cryptocurrency ecosystem in India. And it's going to introduce all kinds of frictions and barriers that are not just as simple as just use a peer-to-peer exchange or trade in cash. Like, it's not that simple of a situation. And it's really fucked up, especially in the wake of the fiat demonetization from around 2 years ago. Like, how large India's population is. I mean, this is a huge amount of people who just had something seriously fucked up happen in their financial world. And this is pretty much going to just make it even harder to gain access to alternatives to hedge against that. More expensive, more difficult. Like, this it's really sad to see, depending on what the actual final ruling on this was by the Supreme Court, to see things play out this way. And I mean, even if the ruling isn't in favor of upholding the ban, I mean, we can already see like this is having effects damaging the businesses operating there right now.
Yeah, I mean, one thing that I don't think made their position any better was that in addition to Bitcoin, I know that they were allowing for trading and selling of other coins, even including the BAT token. So I'm kind of wondering whether if they had stuck to Bitcoin, maybe their stance would have been a bit. I mean, I'm talking about Zebpay here. I'm kind of wondering if their stance would have been any stronger if they had just been sticking to Bitcoin and maybe Ethereum, and not also listing a bunch of tokens, because that probably made. I mean, anytime you engage with these tokens, you're going to bring a lot more scrutiny. I don't know if it would have made a difference in India, because clearly it seems like the government is definitely not wanting to be receptive to it. But I am kind of wondering if the ruling would have been different if they hadn't been engaging with those tokens.
I'm curious too. I mean, like one of the main things that I was taking was like, India is a big society where, where gold is kind of kept together, and people were trying to keep their value. And, there's a lot of gold jewelry, a lot of around in that society. And I was thinking that, yeah, it might have something to do with just Bitcoin itself, trying to, basically create a more solid store of value than gold, and like what that would do to the market. Maybe that just scares them. But it is, yeah, it could be that they just are listing too many of these assets to where people think of it as just like a scam show, and that's why it's going crazy. But at this, we can look at China and we can see that, these exchanges have moved right outside of their borders, and some of their customers, they're still being serviced in China through peer-to-peer. And I think that we might see something very similar going on here if the Supreme Court actually just ruled with the banks and they're going to keep this ban in place. I think we might see some of these companies just, kind of reestablish themselves in Bangladesh or Nepal or Sri Lanka or one of these surrounding countries.
Yeah, I'm also kind of, because like Shinobi's pointing out again that we don't actually know what the ruling was, so that might not even be the reason they're shutting down. It might just be that they weren't running their business well enough, and maybe part of that reason, I mean, that could also be because they were listing too many coins and that was too much to deal with. Or I don't know, the price going down made it difficult for them. Then they were counting on the price going up. So there could be a bunch of reasons why they're shutting down. But I definitely think that these exchanges listing all of these tokens is not, I mean, it's not going to end well for them either way.
I think mostly it has to do with just there's no capital inflow, and I mean, if you can't bring fiat in, then people are stuck shuffling between different cryptocurrencies, and given the bear market and how rapidly they've been crashing, it's not a lot of incentive to do that. But all right, though, time for the
Yeah.
titular story.
Uh-oh.
Samourai says, "Fiat, get fucked." So I've seen a lot of reaction back and forth on this, but the Samourai wallet developers have chosen to remove fiat prices in the Bitcoin wallet. So there will no longer be an option to pick a transaction amount by fiat. There will no longer be fiat balance displays. Everything is going to be purely in Bitcoin. And to be quite honest, I'm I'm not sure personally how I feel about this, but I do know I'm sure as hell not going to stop using the wallet for it. This is pretty much the only wallet out there besides Wasabi that is, and the only mobile wallet that is actually taking privacy functionality seriously. And so this sure as hell ain't going to get me to stop using it. Although I will point out that their their Sentinel watch only wallet is still supporting fiat amounts for use by merchants and other people who regularly use the wallet to receive payments in a way that doesn't keep their private keys exposed on them. So they've made that one compromise. But ultimately, like the title says, it's time to sat your ass down and learn some math. I mean, this really does kind of make sense, both from the user experience point of view and frankly from the point of view of allocating developer resources. Like, eventually users need to actually start recognizing that they are using a separate currency. Like, this is not just a mechanism like PayPal to move fiat around. You are moving Bitcoins around. It is its own currency. It is its own unit. And people need to start getting used to that. And as far as developer resources, I mean, plugging in the functionality for all kinds of different currencies, depending on where you are in the world, ensuring that there's feeds to actually track those in real time, that they're functioning properly. Even just the wallet taking that price and doing calculations for your Bitcoin balance locally, it's pointless complexity for a very small developer team that is trying to devote all their resources to actually giving people a way to use Bitcoin that preserves your privacy. And if stripping this out and dealing with the little extra complication of having to think a bit more, it allows them to put more of their resources behind that, I'm totally fine with it. And really, at the end of the day, if you're just using this for merchant services, you scan a QR code and that payment request has the amount in it. So aside from fringe cases of you sending money to a buddy or doing something that isn't involving a merchant, this isn't really going to make that much of a difference. It's the same thing. You scan the QR code, the amount is baked into it, you check it and you press send. I mean, it's like they said, this Band-Aid is going to have to get pulled eventually, so fuck it. And to boot, it'll give them more time to actually concentrate on making more privacy tools.
Yeah, I mean, I have no problem with the feature change at all. Because actually, when I first heard about it, I thought the same thing as Vladimir Vandalon, that I thought the reason was because it was a privacy leak. Like, that's one of the easiest ways to, leak how much coins you have, is through these, price quotes. Or these price quote services. So I thought that was the reason why they got rid of it. But according to a reply to Vladimir, that was not the reason. It was just kind of an added bonus. So yeah, I mean, I think I don't mind them getting rid of it. I mean, some people, they're just going to end up looking at price quote services probably through a separate thing and not the wallet. But I mean, to me, that would be better than doing it directly through a privacy wallet, unless they had a really good way of not leaking, some information by doing that. So I agree with the feature change. It doesn't bother me.
Yeah, the change. I mean, like Shinobi and you were saying, I mean, they're really moving the ball forward with privacy in the wallets, and what they're doing there, and just moving the whole their space. And I think it does. Eventually, somebody has to say like, we should start really looking at this denomination not in USD terms. We need to just keep it in SAT, and I think good for adoption. I mean, as much as I myself like to think about things in SAT and stuff. I mean, I don't really do it that often because they are kind of all programmed in where it'll kind of just get me better more often saying, like, getting used to like denominating these Bitcoin and Satoshis. And because I've got a friend here in town that comes to the meetups always talking about SAT. He's like, oh, I heard a little SAT on that. And it's like, it's kind of comical the way he says it. And he's always talking about SATs because for the most part, Bitcoin and I mean, zero point zero 0.01 Bitcoin is, it's a, I mean, that's where it's like, even now I'm thinking like, okay, zero point zero 0.01 Bitcoin is $66. I need to stop thinking like that. It's like, one Bitcoin is one Bitcoin. There's Satoshis in there, and I should, get that unit of account correct instead of thinking about things in dollar terms. So where, it's like, okay, you're going to do that for, so many Satoshis, this amount of dollars in Satoshis. It's something that seems not like pretty trivial, but I think in the long run it's pretty big. It'll make people just start thinking about this as Bitcoin more. So kudos Samourai on always moving forward with the space and sometimes pushing us a little forward. So I really like the idea.
Mm-hmm. And to boot, go fuck yourself, BIP 176 Satoshis. Ha.
I like Satoshis.
Mm-hmm. Quick mention before we get to the last story. The port of San Diego has been hit with ransomware. And
San Diego.
Mm-hmm. But pretty much this is like a few other recent attacks on municipalities. It's not affecting any shipping or cargo management. It seems like they've kind of narrowed their targets to some administrative stuff. They're incapable right now of issuing park permits, accessing public records, or the business services that they offer. But the Department of Homeland Security and the FBI is currently involved in investigating this right now. And this isn't going away. And it seems, at least to me, looking at the past few incidents of this, these people doing this aren't being completely retarded, and they seem to be going after mostly administrative systems and things that aren't actually going to have serious economic consequences or safety consequences. They seem to kind of be hedging their bets a little bit in terms of something important enough that might actually get the ransom paid, but at the same time, something that isn't going to have NSA resources or something along those lines heavily devoted to crawling up their ass. And I think it's going to be kind of interesting to see, as things go on, how tightly along that line people pulling these ransomware attacks choose to walk. Cricket.
I was just gonna say, these ransomwares ain't gonna stop, man. I mean, eventually, all this stuff's gonna get fixed. People will start to realize, it's better to just go ahead and upgrade and make things secure and private, and instead of trying to, that or start buying Bitcoin and get ready to pay.
Mm-hmm. All right, last story up. So recently, there was a document leaked, allegedly authored by Shi Feifei, a Huobi employee. And there's some pretty interesting contents in here. It's pretty much tracking payments made and received in regards to EOS block producers. And pretty much it looks like there's a lot of back scratching and bribe payments for reinforcing votes to maintain positions as block producers, and even in some cases, revenue sharing, where large block producers are actually receiving a cut of the fees collected by other block producers in exchange for continuing to vote for their position as a block producer. And one thing, though, I want to point out about the Trust Nodes article we have linked in the show notes is they make a claim here that Bitfinex is actually using the exchange coins that they have to vote for other people. And this is actually factually incorrect. They're pretty much linking to the launch of the network where Bitfinex took the exchange coins and voted to take the network live. But aside from that, they actually have a feature built into their platform where any EOS holders can go and pretty much vote with their own coins to end up deciding how coins will be allocated in Bitfinex voting for those tokens. So Bitfinex is actually pretty much the one exchange I'm aware of that actually lets EOS holders vote themselves instead of just deciding how those tokens are going to vote for them. But it seems like a lot of these exchanges, other than Bitfinex, are pretty much just taking all of their customers' EOS tokens and deciding how to vote with them. And this seems to very quickly have devolved into some kind of exchange run oligarchy with exchanges collectively holding around 50% of all EOS tokens and engaging in this kind of backdoor favor trading to reinforce each other's positions as block producers. So uh, delegated proof of stake has pretty much just devolved into the exchanges in the ecosystem pretty much being in complete control of the entire network. And I think this kind of definitively goes to show delegated proof of stake is a completely fundamentally broken horseshit concept. Like this has pretty much just evolved into all of these businesses favor trading and guaranteeing that they're all going to hold their position and continue to hold their position as block producers.
Yeah. Yeah, I'll tell you, as somebody that goes to meetups that are blockchain oriented, and a lot of Ethereum guys are there, and yeah, they really they rip into this whenever they start talking about how it's easily manipulatable and gameable, and I think it's as somebody that has been around these meetups for a while now, it's an interesting point that kind of is like shaking a little bit of the Ethereum guys that I know, as far as like seeing some ways to game the system and then looking at their own situation and playing that out. But yeah, that EOS and the 21 block producers and yeah, I mean, how exactly is that system going to be sustainable and kept decentralized? And I I don't even think decentralized is in that. I mean, yeah, it's the whole proof of stake situation that's a problem, and then you just delegate it out to 21 people, and now I don't know. To me, it just seems like it's even simpler, but proof of stake at the beginning doesn't really make much sense in my head. So yeah, it's something that's easily gameable. Like the minute you start saying like, okay, well, just these 21 people are going to be producing the blocks. It's like, okay, 21 people is not that hard to get a hold of 21 people. And yeah, of course, a couple of them are going to collude and start working together to increase people's positions. It's real money, people are going to screw with it.
So let's give a clap for Dan Larimer, who pretty much completely recreated all of the failings of BitShares in EOS and just pretended that these problems didn't exist. So let's clap and let's sit here and place our bets on what his next scam doing the exact same thing is going to be.
No prediction out of me. We'll see.
Alrighty then. I guess that wraps it up for the day and brings us into final thoughts. Janine, go.
You have them lined up.
No.
This this is just a funny one from Peter Todd that I saw, where he said that normies hide their booze in a paper bag and Bitcoiners hide their bread. If you don't get why that's funny, it's because a lot of Bitcoiners are trying to get on a no carb diet and even a carnivore diet, and so their secret sin is bread instead of alcohol. Although alcohol would also be technically a sin because there's sugar in it. But yeah, bread.
Yeah, I like bread. I try to stay away from it though, because carbs and all.
And the second one, speaking of ransomware, if you really want to keep you and your family safe from those kinds of threats, Jameson Lopp gave a talk at the recent Baltic Honey Badger conference about this, and most of that presentation was pulled from this article that he wrote, which has the links and everything. So if you're interested in figuring out how to secure your most sensitive information so that you can't be swatted like him or stalked or any of those things, making it harder to find you from like the ordinary hacker who can spend, a few minutes to a couple of hours looking for information about you online, you might want to take some of the advice in here. Or at least I would say if you're not going to take the advice, you should at least read it and be aware of all of the different threats that you could possibly be facing and where the loopholes are in your security.
Ding.
And the last one, well, not my last thought, but the last thing is about the fact that Facebook got hacked recently. Not in terms of the passwords, but they had this really poorly designed authentication token system, which people use. Like if you've ever used your Facebook login in order to create an account or log into an account on a different website, you might have a problem, because basically if you were one of the 50 million accounts that was compromised, it's more than possible that any accounts you had connected to that Facebook account were also compromised. So yeah, not great. And anyone, seriously, if you still even have a Facebook page, you should not be using it to log into other sites. It's really not a good idea, because the whole point of having separate passwords, at the very least, for every website is that if one gets compromised, the other ones don't. But if you're using Facebook to connect to the other ones, then basically if your Facebook account gets compromised, then everything else can. So if you haven't gotten rid of your Facebook account already, at the very least, you should take some time to go through all of the privacy settings, remove all of the authentication tokens from other websites that you use, and actually have separate passwords for each of them. And the last thing I just wanted to say in general was that I ended up deciding not to go to the Hackers Congress in person. And unfortunately, because I was only given a lightning talk, they weren't giving me the option to give the talk remotely, unlike the full-time speakers. So I was on the schedule, but not anymore. I was taken off because I said I wasn't going to go, for a number of reasons. Not even, the one primary thing I told them was obviously that it made me a bit uncomfortable that their theme for the conference was New Order, and yet they, by their own organizational policies and governance, they were unable to resolve a governance issue in their own organization. So I feel like any conference that is going to give an event that's titled New Order, about being willing to shake things up, if it means, not compromising your principles, it seems a bit awkward that they weren't willing to do that themselves, but they're willing to host people talking about those ideas. I believe that, the best way that you can demonstrate your principles is to have it in your own life and with your own relationships. So I don't know if they can't do that. That's a bit sad. But there's a number of other reasons why I was kind of hesitant about going. One of them was that I was given a lightning talk, which means it would have been 10 minutes, and I'm still going to actually publish that because I have the speech written and everything. I'm probably going to even publish it at the time that I was supposed to give the talk, and maybe they'll still share it. I don't know. But it made me uncomfortable that they gave full speech times to a lawyer from BitNation, who, if you guys don't already know, I am not a fan of because it's run by a really horrible woman who used to be a military contractor for the US government in Afghanistan and Libya. And I've been boycotting and, putting out information about another conference who invited her. So not really that happy about it. And then you also might know that another person is another speaker on the roster who calls himself a security expert. And I'm really under the impression at this point that he's not. And it saddens me that it appears they did not do their due diligence in actually checking whether he could actually demonstrate that expertise. So, yeah, that was just the number of reasons why I decided not to go in person, but I'm still going to publish the talk anyway because the topic is important to me and I want it to get out there. I'm not going to and another reason is because there's going to be some other people there that I don't actually want to meet in person, which would be the former YouTube channel that I used to be at. Yeah, and I don't want to let those things get in the way of me putting out information that I think people want and need. So I'm still going to publish it anyway. I'm just not going to do it through that venue.
That's sad to hear. I mean, I'm glad you're going to publish, the material still, and like we get to all see that still. But I mean, yeah, it's kind of sad to hear that that's the way things are going with that Hackers Congress. I mean, thought maybe whenever I first heard about all this, that would get cleared up. But I don't know, these conferences, man, it's like, I don't know, some of this stuff is all about ticket sales. I've seen these ridiculous ticket sales. But yeah, the story on LOP, I didn't catch that. I'm going to read through that. That is something I need to do. I need to burn this icon. I need to destroy all my old accounts and try and start up from scratch with some pseudonym, and the only people that don't know will be you guys and people that watch the digest. They'll understand. They'll be like, it's the same dude's voice, it's him. But at least I'll have that plausible deniability or something. But yeah, in the Facebook story, man, it is like impossible to delete your Facebook account. I mean, I had like an old account. I tried forever, it never works, and yeah, it's just a headache. But I guess I'll go into this final thought I was going to bring up. It's we were talking about the SEC coming after one broker, and here recently the SEC filed charges against Elon Musk for sending out that tweet that said he was thinking about taking Tesla private for $4.20 a share. And I was searching through his Twitter feed to see if I could find. I think he might have deleted that tweet. Maybe that was part of the whole settlement. But he has to pay a $20 million fine and step down from the board of Tesla. And I don't. To me, it's just like I can understand because he blatantly discussed a price about going public, in the public, which I guess that's illegal. I mean, I guess he's kind of showing like how stupid some of these security laws are. The fact that they are penalizing a company that's employing, some of its citizens and is trying to actually make the world a better place. But I think that, it's got a lot to do with the fact that, this isn't the government subsidy SpaceX. This is Tesla competing with ExxonMobil and GM. And, so you see like a different pushback there for what he's doing there. And again, I mean, like it's like him taking that hit of weed on Joe Rogan and all of a sudden people are selling his stock. I mean, yeah, it's just like Tesla's been in the news a lot lately and Elon and all that. And it's just, I don't know. I thought this was pretty ridiculous. And I thought it was just a good example of just how ridiculous the SEC is whenever, it comes to just basically, I don't know, kind of like a Gestapo, man. Just like pay up or get out, or we'll put you something like that. And it's just it's upsetting to see whenever this guy's actually moving forward, building things, and trying to take us somewhere. And yeah, I mean, this organization that's supposed to consumer protection, and it's like, no, you're not really giving a crap about consumer protection. This is all just about keeping your war chest full to keep picking winners and losers and keep the same system as usual. And a topic that I was even thinking about bringing up in the story I was talking about, but figured I'd save it for the final thought. Did y'all have any impression on that when that happened?
The SEC needs to mind its own fucking business.
Yeah, the problem is that their business is to put their hands in everyone's business.
Yeah, those are some good thoughts.
All right, though. I guess on that note, that wraps it up for the day, and we will see you guys on Wednesday. Toodaloo.
Bye.
Later, everyone.